All right, let's jump right in. We're going to be talking about a company that's taking on one of the biggest financial challenges on the planet.
So I want you to imagine something for a second. Picture a whole continent where technology is just exploding, leaping forward. But at the same time, the most basic financial tools totally out of reach for millions of people.
And look, this isn't some thought experiment. This is the real-world problem that actually sparked a multi-billion-dollar idea. Get this, a staggering 66%. That's 2/3 of all adults in Sub-Saharan Africa who don't have access to traditional banking. That is a massive gap in the global financial system. And, well, a huge opportunity for someone to come up with a totally different solution.
And this is where Luno's co-founder, Marcus Swanepoel, really sets the stage. For him, it was never about the crypto hype. It was about solving real, fundamental problems that the old system just couldn't or wouldn't fix.
So, you have Swanepoel, who's a former investment banker, mind you, seeing this huge problem. He co-founds Luno back in 2013 with a strategy that was, well, it was simple, but also kind of radical. He thought, why try to build more banks? Instead, let's use the one tool that's already in practically everyone's pocket, the mobile phone.
And their approach really wasn't about speculating on crypto prices. No, it was more like a five-pronged attack on these very real financial barriers. First, they gave the unbanked a mobile wallet, no bank history needed. Then, they offered stablecoins to help people hedge against crazy inflation. They also went after remittance fees, which averaged a whopping 9% in the region, and slashed them. And finally, they opened up global investment opportunities. All of it right there on a mobile app.
Okay, so that's the strategy. But the big question is, did it actually work? Well, let's let the data do the talking, because it tells a pretty incredible story.
Just look at this momentum, it's incredible. The user base more than tripled in just a couple of years, going from 3 million to over 10 million users across 40 different countries. And here's the key part. By April 2021, almost 5 million of those users were in Africa. That's the proof right there that their core strategy was absolutely hitting the mark.
But what's really fascinating is that it wasn't just about getting more users. It was about how those users were behaving. Back in 2017, the average person held their assets on Luno for about 3 months. Kind of suggests short-term trading, right? But fast forward to 2021, and that number jumped all the way to 10 months. That's a huge shift. It shows people weren't just trading anymore. They were starting to use these digital assets as a long-term investment, a real way to store value and build wealth.
But Luno wasn't about to just rest on its laurels. They started to evolve, moving beyond being just a simple on-ramp to crypto. Their new goal? To build a much broader digital investment ecosystem and break down even more financial barriers.
And a huge part of this new strategy was launching something called X stocks. This is amazing. It meant someone in Nigeria could buy a tiny piece of a company like Tesla or Nvidia for as little as 100 naira. That's like 7 cents. It's democratizing access to global markets on a whole new level. And on top of that, they partnered with Discovery Bank in South Africa. This was a landmark deal, the first of its kind in the country, really bridging that gap between the new world of crypto and old-school traditional banking.
Now, this story of explosive growth is obviously super compelling. But let's be real, it hasn't been a perfectly smooth ride. No company scales this fast without hitting a few, or maybe more than a few, bumps in the road.
So, has all this growth come without any challenges? Of course not. Let's flip the coin over and take a look at the tough stuff, the operational weak spots and the regulatory minefields that Luno has had to navigate.
So the challenges really boil down to 3 main areas. First, there's the operational side. They had a major issue where their safety circuit breakers, the things designed to protect users during a crash, actually failed for certain types of orders. People lost money. That's more than just a bug, that's a serious blow to the trust they're trying to build. Then you've got the regulatory headaches. That really cool X stocks product we just talked about, well, in their key Nigerian market, it's basically stuck in limbo, waiting for approval from the SEC. That puts a huge part of their future strategy on hold. And finally, the legal battles. They were involved in a case in Malaysia over account security. Now, they did win on appeal, which is good, but the whole thing really highlighted some potential weaknesses in their customer support. And when your entire brand is built on being the safe and trustworthy option, that's a risk you can't afford.
So, this all brings up the question, how does a company like Luno even compete with absolute giants like Binance? And the answer is, they don't. They're not trying to win the game of who has the most coins or the most complex trading features for pros. Their entire playbook is different. It's laser-focused on trust, simplicity, and playing by the rules. They're positioning themselves as the safe gateway for the everyday person. And honestly, that's a really smart strategy for any fintech, especially in emerging markets. When trust in the system is low, you don't win by adding more bells and whistles. You win by being the most accessible and the most reliable.
And when you zoom out, Luno's entire journey, all the incredible growth, but also all the tough challenges, it all comes back to this one core idea: financial inclusion. At the end of the day, it's about giving everyone a fair shot to participate in the global economy, no matter where they were born or what their background is.
But Luno's story really forces us to ask a bigger question. The path forward clearly isn't simple. On one hand, their partnerships with banks point towards a future where new and old systems work together. But on the other hand, their core product is all about bypassing the old system completely. So it leaves us with this really critical question. Is the future of finance a bridge between these two worlds, or is it a total replacement of one with the other? That's the real question, not just for Luno, but for the future of money itself.